today.
I know it says good morning, but good afternoon, good evening works as well. You know, it just don't get too hung up on what's on the mug there. But welcome. I am excited to talk to you guys today because we have, I see the admonished in my name is still there. It's always going to stay there. Fine. You guys are painfully asking for me to be hurt by admonishes all the time. That's fine. I can deal with it. But I'm going to do you a favor. I'm going to talk about something that we don't talk about a whole lot on the show. And just tell you something that has been on my mind since, I don't know, just before the election last year, and talk to you a little bit more about kind of some financial topics. Now, I know some people may not be interested. I'm not giving you like expert advice or anything like that. In fact, on Wednesday, Stephen gave me crap after we talked about gold for a minute, and said, yeah, go ahead and give us your professional advice, and then sat back and I was like, no, I'm just saying I've noticed certain things, and I hear noticing is, fine these days. I am interested in what this means. I'm interested in why you have the S&P 500 up 13.4% over the last year, Bitcoin up 67.6%, gold up 58.8%, silver up 60.3%. And then comparatively, the dollar is down about 4.6%. Those things are very interesting to me because when I took finance in college, gold was put out as something that people use as a hedge against the market because they want to make sure that they have a balanced portfolio. How we've always talked to you guys about this, whether it's gold, silver, anything else, that you have a balanced portfolio. We're never going to tell you to go grab, everything, like put everything you got in Bitcoin and hope for the best, or Doge or whatever else, right? So I just was curious. I was like, wow, why is the market up and it's pretty strong, and all of these other things are up as well? It just didn't make any sense to me. And really, the gold price has been skyrocketing over the last year, but it's reached all-time highs, topping $4,100 per ounce. Here.
U.S. stock futures rebounding this morning after the major averages closed in the red, halting 7 consecutive days of gains for the S&P 500. But the gold rally, it continues to power higher. Spot gold hitting $4,000 an ounce for the first time ever. Billionaire investor Ray Dalio says he sees gold as more of a safe haven than the dollar. He compared its record run to the 1970s, a time of high inflation and economic uncertainty. Plus, NVIDIA reportedly investing in xAI as Elon Musk's startup looks to raise $20 billion. Bloomberg News reporting the company is investing as much as $2 billion in the equity portion of xAI's fundraising. The report comes just days after rival AI startup OpenAI announced a blockbuster deal with NVIDIA competitor AMD. NVIDIA declined to comment on the report.
So there's a reason we included the NVIDIA part in there, and we'll get to that in just a second. But gold's up about 58.8%, I think is the number I gave you. Yeah, over the last year per ounce. Now, I just so happened to buy gold right after the election. So things went swimmingly well for me in my timing. But again, it's part of a balanced portfolio. It's not like I just put, every single dollar that I had in gold. And the reason that I bought it was to make sure that I had some balance. But like I said, it's typically a hedge against a market that is filled with uncertainty and risk. And you guys know that I am not the world's expert on this. I think I have a bit of an understanding of some of the questions that I have, some of the things that I've noticed about the markets lately, but I wanted to bring in somebody from the financial sector to be able to talk to us a little bit about that. And that brings us to my guest today, Samuel O'Brien, who's been in the financial markets for about 10 years. Let's bring him up. All right, Samuel. So full disclosure, you work with a company in the financial industry with True Gold. And is that the short name? True Gold Republic? Do I have to
True
say
Gold
like
Republic.
There we go. True Gold Republic.
Yeah.
The full name. But this is not like a sales pitch of any sort, right? We are partners in this deal, but you have some understanding. We actually talked just before the show on a number of different things that we're kind of adding to this conversation about this strange place that we find ourselves with the market. So just tell me a little bit about how you got kind of into this market and what you guys do.
So obviously I'm not from America, but I started with my business partner. We worked for an American precious metals firm. This was going back 2013, and we started selling physical gold and silver. But that company was like mainly focused on the fancy coins, collectible stuff, things like that, which was It's good for some people, but it's not giving you direct exposure to the metal prices. Like sometimes you'll be paying 2-3 times more than what you need to. So if the price goes up, you think you've made some money, you probably really haven't. So we were sitting there one day and he said that, I've got an idea, we can do this way better. And so, credit to him, he set up direct bullion in the UK in 2015. I was the second employee, so it was like a small team of us. We worked long hours, but we just sold, physical gold and silver to the British public, and it took off like a rocket. It did really, really well. Then COVID hit as well, so there was like crazy increased demand for precious metals because people just didn't know what was going on.
Right. Yeah.
So that really helped us out. And then
the markets were crashing at that time, so that makes sense. Markets go down, prices of these things go up.
Markets were going down. Right? Everyone was
not like
frantic.
Today.
Everyone was very frantic, and then everyone was just buying gold and silver. They're like, we don't know. This could be end times, right? We need something. Everyone was buying toilet paper, gold. Silver.
People were hoarding toilet. You see people with like a closet full of toilet paper. It was like prison rules. You trade a roll for like a steak or something like that.
Exactly. It was the weird commodities, but obviously gold was that thing where people thought, things get really, really bad. There was that week, right, where the market breakers were going off every single day. Market was shutting down. So people were very scared. And normally, as you were saying earlier, like gold is there for when people are fearful. They buy gold and silver, mainly gold just to protect themselves against downside risk. Like that's the idea. But we did very well in that period. And then I pitched the idea. I said, look, let's take this to America. Let's go out there. I was fortunate enough to be blessed with that opportunity to do that. We opened up a first office in Miami. And out here, there's bigger companies that have been in business for a long time. So we just wanted to set up like a boutique operation, small group of guys here doing it the right way. Trying to educate people on how they can do it. We have to take our lumps as well. We could have done it the quick way, but we took the long route. But it's
better to do it right. I mean, we've been very, and I want to get into this. I have some key facts that we're going to talk about the markets and some of the AI stuff that we think is behind this in a number of different ways, not just in driving kind of some of the uncertainty, but also a lot of the gains. But we're very particular about the people that we partner with because we're not looking for kind of every single sponsor out there to come on board. Stephen has often talked about gold companies that there are a dime a dozen, and there are very few that do it the right way or even take care of their customers. And we're like, why would we send people somewhere that they're not going to be taken care of? They're going to be taken advantage of and buy something that's like a collector's item as opposed to just getting the actual product. Like you said, pay a premium for it. When gold goes up, the collector's item doesn't necessarily track the same way. And so we really wanted to avoid that. And also the whole gold has never been worth zero. Yeah, neither has coffee. All that makes sense. I don't want to scare people into doing anything. I just want people to be educated and make their own decisions and then figure out what makes the most sense for them, which is really funny because that's where I was. And so I'll tell my story a little bit and then we'll jump in. I was like, my uncle had gold in like the 80s. And he ended up getting a divorce, and his wife, not divorced, I think they just separated. And his wife sold his gold bars. And apparently they were pretty sizable gold bars because, they're back in the 80s, they were worth, significantly less than they would be today. And so I just imagine, like from Die Hard with a Vengeance, where they've got those giant gold bars in the back, or something like that. I imagine it was something like that size, like 100 ounces or something like that, which would be great. And she sold them to kind of stay afloat. And so that was the first time I'd really heard anything about it other than like Goldschlager. I knew there were little flakes of gold in that drink. And I was like, okay, I understand what gold is. But I always wanted to own it. Like I just wanted to have some, not like to have a whole lot or anything like that. And I just never it was almost like paralysis by analysis. Like I couldn't pick a company to buy it through. I didn't know if I could just go to a store, like a gold and silver dealer or something like that locally and just buy it for market price. I just never done it. And so because it was something unfamiliar, I just didn't do it. Yeah. And I had wanted to do it for several years. And finally I did this last year, picked a company, went with them and bought it. And I'm really glad that I did, because I've gotten, like I said, all the upside. Again, it's not like a giant portion of what I am trying to put away and save responsibly. But I thought if I'm having that same kind of, thought process, I'm sure a lot of other people are. And they really don't know where to go. And it's because they've been taken advantage of so much by people and fed so much crap by people on what they have to do and they get scare tactics and all these people switch gold sponsors. They don't even care who it is. They're just like, yeah, we'll be the face of this next gold company in 2 weeks. Just give us a minute to finish our current deal, right? It's just a weird game. Yeah. So we always wanted to avoid that. So got high expectations. If you guys end up doing any business with Samuel, make sure you let us know if he does anything wrong. I doubt he will, but our guys will come back to us. Also, let us know if if it's a good experience, because I've had some bad experiences with people before, but not our sponsors. They do a great job of taking care of people. So let's jump into some of the facts of what's going on in the markets. Gold will be a piece of that, but mostly we're talking about just kind of what's going on in the financial markets and how this stuff kind of shakes out. So key fact number one, the markets do appear to be very strong, right? So the S&P 500, and I'm going to give some remedial stuff. I know most of you probably are familiar with what that is, but it's the list of the 500 largest and most important publicly traded companies in the U.S. Includes companies like NVIDIA, Google, Apple, Microsoft, Amazon, Tesla, Meta. If you noticed a trend there, congratulations, you're paying attention. The top 10 S&P 500 companies account for almost 40% of the entire value of the S&P 500, and we will dive into that just a little bit more later on. But if you can see a problem, congratulations. That's potentially a problem if they are all running in the same direction, and a lot of the growth and performance is coming from that direction. So the S&P 500 is performing really well. It's growing at a 22% annualized return over the last 3 years. And just last week, it hit an all-time high, right? So these are all good things, right? The S&P 500 is going up. A lot of people may wonder why they don't use the Dow as kind of the benchmark. I think the S&P 500 is a little bit more stable. Yeah. At least historically, it has been. We might undercut that theory a little bit today. Yeah. So I'm not 100% sure, but I do know that when I look at kind of like 401k and I look at just any small investing that I would do, I always like to see green up arrows. You don't always see that though, right? And I don't know enough about the stock market other than to get in trouble. Like I was trading stocks and options when I was 18, and I made a little bit of money and I lost a whole bunch of my sister's money. So anytime I would lose, it was her money, and we weren't rich or anything. We didn't have a ton of money to lose. But I would trade on her account and be like, "Oh, sorry, I lost you $1,000 today. That's really my bad." But anytime I would win, I'd feel like, "Oh, I've got this game figured out. Like this is so easy."
Everyone makes money in a bull market, right? Like,
yes, exactly.
Right now, you can pick stocks, and like we have, like me and my friends have like chats where people recommend tickers, and everything's going up. But then, like there's a few days where things coming down, and you're like, "Okay, we're not that good at what we're doing right now." But everything right now is obviously going ballistic, which is very weird. Like it's very strange. But then gold and silver, at the start of the year, we didn't. If someone said to me at the end of the year, at the start of the year, at the end of the year, gold could be touching $4,500, then I'd be like, that's very bullish.
Come on, tell me exactly what you would have said. Yeah. Like you would have probably bet every dollar you had that's probably not the case.
I would have taken the under on that one. Every time. But we thought conservatively, and we wrote blogs and reports. We have a market analysis that does things, and he, from the technicals, he was saying if $3,000 for gold would be a great year, and for silver it could hit $45. That's what our expectations were, and was like, if we could hit that, people are going to be very happy, and people are over the moon right now. With people that invested last year, like you, the year before, these are people that have made stock market gains almost in gold and silver, which is like supposed to be. It's an insurance policy. It's not meant to go up like a stock. So that's like being the weird factor. But
well, everybody talks about, and speaking of bull markets, when I was doing this whole investing that made me think I had this thing figured out, it was 1998. So it's not exactly like I could miss very easily. Yeah. My biggest misses were when I would buy options that didn't cover in time, or something like that, because it was, too close. The window was too short for them to actually hit. But outside of gold and silver, what is like the most common, like other two precious metals that people will buy, like physical?
I would say that you're really mainly looking at gold, silver, and then there is minor interest in platinum. Like, growing a little bit, but still, like, for the 5 years that we've been in business out here, the amount of platinum that we've sold is fairly nominal. Really? People like the idea of it because it sounds different, right? Yeah. But I mean, I've never followed platinum that much. I've always just been on gold and silver.
Doesn't make a whole lot of sense.
No, it doesn't. Yeah. And I know that people like it. They like the idea of it, but it's just not. It doesn't have the same.
It's not the historical standard that gold and silver are. Yeah. And you've got to actually hold up. What is this gold back? Is that what you're saying over there?
It's a gold back. Yeah.
That is 1/1000th of an ounce. And is that legal currency?
Legal tender.
Tender,
and gold and silver is now legal tender in a few states. I think it's up to 5 states. Florida in March or April was just approved. So gold and silver is now legal tender. So it means you can spend it. You can spend gold and silver. So this company, the Goldbacks, they got approval to do it, and you can spend this. Like in some shops, you'll see on the sign on the door, like they accept Apple Pay, Visa, MasterCard. You can accept a Goldback as well.
That's awesome.
It might be weird getting some change out of this guy, but
a little bit, yeah.
But it's showing that people want to do it, and it's just a different way, a different currency.
Yeah. Well, there is kind of this counterculture movement right now, and I think obviously the coins are like Bitcoin and all that other coins out there are driving a lot of that decentralized in a different way, right? But there's still kind of a practical, like, okay, if I want something physically in my hand that's not my phone, what do I have? And there are different options for that. I actually thought, because what we see is like, one of the reasons that all of this could be happening is there's these like investor classes of people that are constantly looking for new places to put their money because they're bored. And so that was part of the rise of certain random things over the last 10 years. One of those being Pokemon cards. Yeah. And then there was the graded card phenomenon with it wasn't just Pokemon, that was part of it, but it was like the football cards and basketball cards, like graded PSA 10 gem mint cards became, I didn't realize this, but like a Wall Street phenomenon. People with tons of money. Yeah. And like I'd bought one for like, I don't know, $1,000 and sold it for, I think, $2,000 or $1,500, and it's worth $90,000 today. It was like 20 years later. So it's not like I'm going to sit there and hold on to it, but I actually looked over and I saw just the hologram. I'm like, what do you have, like a Charizard card here to make a point or something like that? Like a hologram, just to be like, see, this is what I do. You didn't wear it around your neck, like one of the Logans, but or not one of the Logans, Logan Paul. He has 2 first names. Yeah. It always throws me off. But anyway, I thought it was interesting. But yeah, platinum, I don't know where else, like what other metal, but I know I always see people pushing.
Copper? Yeah, we was in, before we came here, we was in downtown, and I just checked out one of the gold and silver exchanges there. And I was saying to him, like, how's it been? He was like, people are so infatuated with metals right now that people are trying to buy copper. And one of our wholesale suppliers was like, you can start selling copper if you want. And I was like, I'll let you know about that. Like if we get inquiries, but you can buy like a kilo of copper now, which is like a nominal amount. But people have interest, and metals prices are all going up. Like I'm sure copper could go up too. So people are interested about it. But I would say, if you're starting out on it, like stick with the basics. Gold, silver.
Don't get too crazy yet. Yeah. But somebody's going to be like, listen, that's going to go up like 20,000%. But
it could
as soon as people get on to palladium or whatever it is, pick your random metal. That's the one that's going to go up. You can do that later, but just get everything in order first, okay? All right, so key fact number 2. Really, right now, the investors are, it seems like people are spooked, but they don't really know where to go, right? So if the markets are doing fantastic, why do you think you see investors flocking to items that would typically tell you that the markets are teetering, or at least there's a lot of concern about them, like gold, Bitcoin, silver, other assets? And really the answer right now seems to be, and we can have some conversation about this, is that they feel like the market gains are too heavily concentrated in AI-related gains. Like I said, the top 10 S&P 500 companies are 40% of the value of the S&P 500. And those 10 companies heavily rely on AI as a basis for their growth. And investors right now are kind of rightly asking themselves, like, is there an AI bubble? So let me give you just a few stats really quickly. So since October of 2022, AI has been responsible for 75% of S&P 500 overall market returns, 80% of S&P 500 earnings growth, and 90% of S&P 500 capital spending growth. And just one example, so I told you we'd get back to this, NVIDIA. So by June of this year, NVIDIA alone had already accounted for 34.5% of all of the S&P 500's gains for all of 2025. And I think concentrating all of that in such a small industry, it's kind of like the tech bubble that we had. There was so much that was riding on tech whenever those kind of overvaluations and people investing a lot of money just to try to get in on the right company at the right time. You pay way too much. Yeah. And we've heard a lot about that with, with the stories at Meta, like, some of the best AI engineers in the world getting like $100 million signing bonuses, just way overpaying to try to keep the best talent at Meta. And it seems like investors are seeing this and going, okay, I know AI is a thing and it's happening and it's going to change the world in a lot of different ways. We don't know all of them yet. I just don't know who is going to be the one to break through, and not everybody can.
Well, I think when you look at companies like Meta, Google, like they'll buy like anything that has great potential.
They will.
So they're always going to be at the top. There is obviously an AI bubble because, like, I was talking with my marketing guy, and he was saying like, there's one AI technology that comes out, and we run to that, and then we run to something different, then we run to something different, and it's like always chasing the new shiny object, and all of this stuff is costing a lot of money. So there is definitely an AI bubble, but with companies like Nvidia, like, I don't think that bubble will pop. I don't think Nvidia, we wake up tomorrow and it's halved in value. It's a machine. They're the backbone of this AI industrial
Bookmark
revolution.
this for one scary day,
not.
maybe. No, I know. I think you're right. There are certain players in the AI sector that will do better than others and perform at a more stable rate than others based on what they provide. But there are also a lot of people trying to catch up. And I agree with you that Meta and Google are positioned to be able to buy these companies up as they come up, but there are a lot more people going after them now.
Yeah.
And I think that like it's interesting to watch kind of what's happened with X, because when Elon Musk bought Twitter, he didn't buy and this was pretty obvious that he didn't buy it just for the market value of Twitter, but I certainly am not saying that I was predicting exactly where he was going with this, but very quickly it became clear, wait a minute, he's trying to do something with AI and he needs to be able to train his models, and he needs a ton of information to do that. What better way to do that than to buy one of the biggest social media platforms on the planet?
Yeah.
And have information from as many countries as he can get X to be available in.
Yeah.
So that made a lot of sense, and it's like, okay, that's why it was worth more, in the long run.
And we thought he bought X in the interim or initially just because of the free speech aspect.
I think that was a component.
It was definitely a component,
but not
now
the whole
we're
thing.
saying, okay, Grok's here now. Okay.
Yeah.
But Grok is, especially for like gold and market commentary and stuff that perhaps is more right field sometimes, you try and speak to ChatGPT and it's still very censored on those topics, whereas you can speak to Grok and Grok gives you
all kinds of buying advice.
Sometimes the truth, yeah. It's but I'm glad that he bought it. I think Grok's great. I use that tool a lot.
Yeah, we like it. I like Elon in a lot. I like a lot of things that Elon does. I don't think he understands free speech fully because he's not steeped in it, right?
Yeah.
So we've seen that with certain things that have happened with Pam Bondi and hate speech and stuff like that. Like, hate speech is not a thing. Like we've moved past that, years ago being a thing. And when you have somebody say something like that, or when you have, I think, Elon and really X, I shouldn't say Elon, it's his company though, that boots off some voices early on, you're like, well, wait a minute. Like, I thought this was about freedom of speech and these people aren't breaking any laws, and so therefore they should be able to speak freely. I think that just takes time. So I think a little bit of patience is required, I think, with Elon on some of these issues. But broadly speaking, he's been very, very good. Like, we haven't had the ability to communicate like this openly in a very long time, and not even say controversial stuff. Just talk about things that we believe and ideas that we have, and not really putting any people groups down or denigrating anybody or calling for violence, anything like that. Just being able to speak. Like, it's been a very weird, last kind of, I don't know, what do you want to call it, 8-10 years.
I feel like it's definitely turned a corner, but then still in the UK, I see stuff every single day, which is like someone's going around this old guy's house, just because he posted something about Palestine on Facebook.
Or put up a flag.
Yeah, it's
insane.
And Elon's behind Tommy Robinson now in the UK and supporting that freedom of speech movement because he was labeled as a terrorist. And he has some stuff in his past which I definitely don't agree with.
Right.
However, there has to be a line. There has to be some sort of compromise.
You can just dislike somebody.
Yeah,
that used to be enough.
Yeah.
Like, you just tune out.
We don't have to throw everyone in jail.
Yeah,
it's
exactly. There are middle grounds.
Yeah.
Let me give you just a quick example of some of the risks of the concentration. Right. So if investors are saying, all right, AI, there's a concentration, this bubble could burst, it could drive some of these companies out of the market. Maybe I'm invested in those, or maybe some of the value of the S&P is going to be tied to that. And it doesn't have to be like a fundamentals issue. It can just be a public perception issue that drives the market down, right? Just like right now, it's not necessarily a fundamentals issue that has companies trading at the multiple of earnings that they are. It's just a lot of enthusiasm in the market right now, and that can go away quickly. But other things can happen, like China. And that happened here this last week. So China, they dominate the rare earth market. We've known that for a long time. They've needed it. They've controlled it because all of that stuff is needed to produce the chips fueling AI. And they do that by controlling 70% of rare earth mining, 90% of rare earth processing, and 93% of magnet manufacturing. And we talked to you about that. But last week, they also announced that they were tightening restrictions on exporting rare earth metals. I don't know if people remember this, but we gave the example of Germany, essentially, if they were going to export something to France, but they had used Chinese technology to make it, and it was one of those export-controlled items, they would have to get permission from China to export to France.
Yeah.
That kind of crazy kind of mentality of like, well, we didn't even use, like, we used some technology that was yours, but we didn't, this isn't, like, these are our minerals.
Yeah.
Like, we dug it up or whatever, right? And so it started to make things a little bit more controlled, and to a point where President Trump had to respond. And we talked to you guys about this, and I'll just read his quote really quick. I can't do the voice. Steven does the voice. I could try a Trump. There's a handful of words that I can hit every once in a while. My wife thinks I can do a fantastic Trump voice. I'll leave it at that.
Let's hear it.
No. It's just been learned that China has taken an extraordinarily aggressive position on trade in sending an extremely hostile letter to the world stating that they were going to, effective November 1st, 2025, impose large-scale export controls on virtually every product they make, and some not even made by them. Based on the fact that China has taken this unprecedented position, the United States of America will impose a 100% tariff on China over and above any tariff that they are planning currently. And this basically sent them, it's in addition to the 40 or 50% that caused a lot of the meltdown over what's going on with China. And this sent the markets tanking. I had no idea why at the time until I saw this, because we were getting ready for the show. But it was very early in the morning, I think, that I saw this. And we're like, okay, well, we'll see what happens with that. And then it turns out, like, the very next day, it's like, okay, maybe there was a miscommunication. And so the markets are like, hey, again. And it's like, I don't know if there's a miscommunication. Oh, I've never seen somebody, like, control the markets through posting social media messages.
It was the same last time, though, wasn't it?
Yes.
It was the same last time. And it's like, okay, something's happened. He's tweeted. But then today, there was another tweet. And I think that things have now cooled off a little bit.
Yes.
With the trade tensions. And maybe, things are out of whack. But yeah, it's very, like, up and down.
Yeah. And thankfully, things have settled out a little bit, but it doesn't take much for the market to run scared, right? And think about, like, the retail investor, so somebody who, like you and me, basically, that's investing in the market. It doesn't take much for us to go, maybe I should pull back, or maybe I should start hedging against kind of the market moving, because maybe Donald Trump gets in a bad mood and China does too, and all of a sudden we've got even more of a trade war or more tariffs or whatever else, and it causes a problem.
But I think we feel that way. Like, if I trade stocks, I have the worst paper hands ever. Like, I see it coming down a little bit.
You're like, I'm out.
So, that's it. I'm done.
My stop loss is 0.05%.
But I think we feel that way because of how high things are. If we was in, like, more stable times and we wasn't seeing some shares jump 50%, 60%, then you'd be like, okay, just ride it out. But now things are moving 10% up, 10% down, 15% up, 15% down.
Yeah.
It's it's different times. It's way more volatile. So
way more volatile. And probably the worst piece of advice I ever gave anybody. My shirt's on a little that way. We get these, the new Left is Violent, Change My Mind shirts. So if you guys want to go to crowdershop.com. I wasn't planning on doing a plug for that, but they're brand new, so sometimes I have to work on where the fit is. But I think the worst piece of advice I ever gave to one of my friends at church, we were in a community group, and we would always talk about putting God first and trying to make sure that we had our lives kind of oriented in the right direction. And he's like, oh yeah, I got some Bitcoin as part of my I got a bonus and I used it to buy Bitcoin. I was like, oh, really? And this was probably like 2015, something like that. I could be off by a year or two, but the price will help you kind of understand it. I think he bought it for like 1,000. It was at like 5,000.
That was,
probably, somewhere around that time period. And I was like, it's like $5,000? And he's like, yeah. And he goes, I'm just going to hold it. And I've got like five Bitcoin. And I was like, well, that's amazing. And you should sell it right now. What are you doing? Like, lock in your gains, man. You've made 5 times your money.
Yeah.
And so immediately after that, it went up to like 10 or 15. And he was kind of making fun of me. And I was like, yeah. But you should totally sell it now, because it's just like the Pokemon cards are worth, I think, less now. And they will continue to be worth less over time because it just fades. But he should probably have held on to it. I hope he did.
He's probably stoked right now. But I think that with anything, it's like, why do you get into it? Like, if you're in Bitcoin because you believe that the future of money is Bitcoin,
then you're not going to
stay
sell
in it forever.
Yeah.
Like, if you're doing it to make money, then you cash out.
Right.
Like, it's the same. With gold, like, people own gold because they think that's real money, which it is.
Yeah.
So it should go up over time.
Not fiat currency, you mean?
So why would you sell it? Yeah.
We can just print more of it. You can't print more gold unless we get the asteroid. Everybody talks about the asteroid that has like 50 quintillion, dollars worth of gold and everything in it. All right. So key fact number 3. We do feel some additional pressure from kind of a weaker dollar right now as well, right? So that can be due to a lot of different reasons, but domestic and international. So we're going to measure strength kind of in 2 ways: domestically in buying power, right? And internationally kind of versus other currencies. Typically that's going to be the pound or the euro. There's a handful of others that maybe you could do as well, but those are the main ones. Domestically, when you talk about inflation, I mentioned this to some of the staff. I said, I haven't really felt inflation. I know there's some inflation, obviously, and we've kind of locked in kind of the growth of inflation. So we got to a point, I just don't feel like we're making giant leaps in inflation where I feel it as much. I see prices of gas go up and down. I see prices of certain commodities go up and down. But I don't feel like there's runaway. But then you throw out this number where, $100, to have the purchasing power of $100 in January of 2020's money, you have to have 126 now.
Yeah.
And so when you do the math like that, you're like, oh, okay, that's like an approximately 20% loss in buying power in that $100 bill that you've just stuffed under your mattress. And so it kind of brings it home, but you don't feel it quite as much because maybe it's this like...
I did earlier. I bought a coffee and a bottle of water from the hotel cafe and it cost me $12.
Well, I think the hotels screw everybody. So I think you're just used to being screwed by hotels
or a Big Mac, right? You used to buy a Big Mac, fries and a Coke, and it would cost $5.
Yeah.
Now it's 15. It's gas prices is deceptive, right? Because we saw very high gas prices. They've come down a little bit. So, and a lot of people measure that with, okay, well, how much does it cost to fill up your truck?
Right.
Cost 100, 150, 80. That's a swing that we feel. But groceries, on the other hand, I feel like groceries are always going up. That's it. And I think, if you're privileged or you have like a high income, then you don't feel it on like a macro level. But I think that going out and people that are perhaps more middle class, that are still trying to make ends meet or barely head above the parapet, these are the people that truly feel it. Like inflation is the tax on the middle class. And
for sure.
Those are the ones that get screwed on it. So people also get put in a corner where they feel fearful because they see dollars devaluing. But in bigger terms, like if you screw out a little bit, 5 years ago, $100,000 was like a decent amount of money. Today, it's probably worth 70% of that. $1 million, like when I was growing up, my dad would say,
unheard of.
Yeah, he would say, oh, that guy's a millionaire. He's done an amazing job. He's got a good business. He's done something incredible. Now, you don't have $1 million. Like, you probably,
who are you? No,
yeah, you're in trouble.
I don't have $1 million, and I'm not like that super echelon.
But I'm a young guy. I'm 31 years old. Like when I retire, like if I have $1 million, I'll probably be in trouble.
Yeah,
I will need a lot of money.
No, you for sure will.
Yeah, and that's just going to be, when people talk about like the death of the dollar, right? That doesn't exist. Like the American dollar is not going to dissipate into nothing overnight. That's not going to happen. Like people that say that are lying to you, but there will be a gradual decline on that, and that's inflation. That's what we feel. It's just getting weaker and weaker and weaker and weaker.
And as it gets weaker, it slows domestic spending, which slows down the economy. I mean, these things aren't always 100% one-to-one, so I'm not saying that, but I'm saying it does have that impact to a degree. So let's look internationally. Foreign investment growth is, in some ways declining due to tariffs. Like that scares people a little bit, but it's resulted kind of in a weakening of the U.S. dollar kind of versus other currencies, even though they're still buying our treasuries, right? So there's still a demand for our treasuries.
They are still buying U.S. treasuries, but as of the last couple of months, foreign central banks' reserves now hold more gold than U.S. treasuries.
Right. So
there again, it's not going to be like an overnight switch of everyone saying, okay, we don't want U.S. treasuries anymore. They just want them slightly less.
What if we printed, I don't know, $40 trillion tomorrow, paid off all the debt, and had a couple of trillion left over, do you think then maybe they'd be like, okay, what the hell?
Well, then
I mean,
we
with
really
zero
are,
debt, I mean, I
then
feel
we
like
really are in play money, aren't we?
yeah, well, exactly.
Then,
I mean, I don't know why I threw 40 out there, but 40 between friends. Let's make this happen. No, so that is a fair point. Like, you've got a lot of these people, going to reserves of gold a little bit more heavily than maybe they have in the past, and that's driving it. And there's institutional buying of it as well. That's a big reason, not a major reason, but a big enough reason why Bitcoin is going up as well, because people are buying that and holding it as companies.
Yeah.
Yeah,
Ken Griffin was speaking like 2 weeks ago, and he was saying that you just look at the price of gold and Bitcoin, and people, other nations are looking at alternatives other than the US dollar, and that should be concerning for people. It should be concerning enough to say, okay, we need to shift into something else. And it's not just because they think the US dollar is going down, down, down. It's because also we did weaponize the US dollar. During the war with Ukraine, we seized US treasuries owned by Russia. So that means that they invested all that money into them, and it wasn't truly theirs. So if they wanted to seize Russian gold, then they'd have to take an army and go to Moscow and get it out the vault. Like, that's different, right?
Yeah,
so
a little more protected for them.
Yeah, other countries that don't have as favorable relationships with the US would then look at that and say, okay, maybe we'll dial US treasury spending back a little bit, and we'll look at something else. That's just logical. It's not, it's not that economical.
No, yeah. And look, we've been getting away with it a lot, all of these other things, because of the reserve status, right? Basically having the reserve currency of the world. That's helpful, and there are dips. But there's also something that, we've talked about. I don't want people to be afraid of this. And I think that's the reason we did a segment on this, I don't know how long ago, 6 months ago, something like that, on BRICS. And the kind of the economic bloc comprised of Brazil, Russia, India, China, and South Africa, and 5 other members. Some of the 5 members they brought in, I was like, I thought one of them was like Ethiopia or something like that. I was like, what? Why are you bringing in this person? Like, they're not going to do anything. It made
Saudi Arabia just came in.
Saudi Arabia as well?
Yeah. Last year, there was 30 new countries that applied to become join BRICS. Saudi Arabia was one of them that was admitted. They're still kind of trying to see who else they want to bring in. But
that's significant.
It is.
I mean, it isn't going to happen overnight, but people are talking about it openly right now.
Yeah.
And that's the difference. Like, it was kind of a taboo subject for a long time, and now people are openly talking about it. Like you said, the R in BRICS, Russia, they have a little bit of a bone to pick.
Yeah.
If you seize their treasuries or cut them off from the financial markets of the rest of the world, to kind of nudge their behavior in a certain direction, they may want to get to a point where you have less leverage over them. But Donald Trump knows this, so President Trump actually warned any country that joined BRICS that they would have to deal with American tariffs.
You wouldn't have the dollar as your currency anymore. You wouldn't have a world domination by the dollar if I didn't win this election. And now the domination, like BRICS, I told anybody wants to be in BRICS, that's fine, but we're going to put tariffs on your nation. Everybody dropped out. They're all dropping out of BRICS. BRICS was an attack on the dollar. And I said, you want to play that game, I'm going to put tariffs on all of your product coming into the U.S. They said, like I said, we're dropping out of BRICS. And BRICS is like, they don't even talk about it anymore.
He's not wrong. He is putting pressure on countries that are in BRICS, and he is trying to incentivize people not to join up and try to weaken the dollar further. But in doing that, it's kind of the same thing that we talked about to a degree. Like, it's like, I'd like to have less of my world dependent on you so that you can't leverage your power over me.
Yeah.
And that just makes sense to a degree. I get it. Though I kind of like the situation that we have.
We have a very favorable situation in the US because of that status. But if that did go away even a little bit, then you see higher interest rates, you see cost of goods rising even more, less access to these sorts of goods. So of course he has to play that hand. You can't have a situation where you see people teaming up against the US dollar and you don't do anything about it. And maybe that would have been the case if he didn't win. That's perfectly valid. And also, that's why we spend so much on military here. So
well, that's true.
We weaponize it.
So. And we've, that's part of what, I mean, I don't know, a lot of people understand kind of the Bretton Woods Agreement and what came out of that after World War II. And what essentially the United States did is we're like, okay, well, we'll loan money and we're going to guarantee trade around the world with our Navy. And the importance of that and how much money we spend on that, not just to have a functioning Navy where we can go over and pick a fight pretty much anywhere on the globe that we want. Whether or not that's a responsible thing to do is another question, but the capability's there. And for us, doing that is kind of one of the things that got us this reserve status. This okay, we're going to use your currency. Plus, nobody else's currencies really were worth a whole lot right after World War II. Like everybody's economy was in shambles, and it was not exactly, doing that great long term since World War I. I mean, everybody's economy was basically on the brink of destruction after that. So it's a very interesting place for us to be as younger people, where we haven't experienced a time where there was even real conversation about anything else.
Yeah.
And so BRICS is kind of this newer idea economically to us.
Exactly. Just to be backed by something which isn't in control of the US. And you can perfectly see why they would want that, right?
Yeah.
It's just like, okay, well, you control the money printer, you control everything. Maybe we can start doing some business outside of that. And you are seeing, even some of America's allies now doing trades in euros and yen, stuff like that outside of the US dollar. The petrodollar deal as well.
Right.
It was expired. So there is definitely stuff there which could devalue the dollar. But as I said, it's not going to be a point where it just crashes. And what would replace it? If nothing's close. The US dollar is still the strongest currency in the world by 100x.
Yeah.
Nothing's really going to come close to it. It's just going to slowly get weaker and weaker and weaker.
Are you holding one of the gold coins
Yeah,
there?
this is...
Does that feel powerful to have $4,100 plus dollars in your hand?
$4,300, yeah. $4,200 earlier, but
Jeez.
Yeah, it's crazy.
It just keeps going up every single day.
It does. Yeah.
Is there any benefit to buying, what is that, the Double Eagle versus just like
It's an American Eagle. I mean, yeah, if you're looking for something which is like very recognizable, very liquid, then an Eagle is great for that. People sometimes have fears around buying bars because they could be fake, could be not fake. This is obviously a lot harder to counterfeit. You don't really see much counterfeit gold. You probably do in China a lot more than here. Here, I don't think we've ever had someone ship us gold to buy it back from them and they'll say, oh, that's not real. It just doesn't really happen. But no, I mean, the US mint though is under strain. Like the premiums on American gold always goes up. You've seen silver eagles as well. You'd probably be paying maybe $60, $65 today for a silver eagle. Spot price is 52. So the premiums are going to keep going up, and that's because they can't produce enough. They can't produce enough gold or silver coins. So
does it make more sense then to buy,
you can buy,
something that's more, I didn't buy any of like I don't know what to call it, like the name brand stuff. Right? Yeah. When I bought it, because I'm like, I don't want to pay a premium for anything. I feel like gold is going to be fine. Silver. I don't know what the coins that I got, I don't know what they're called. But it's not the real like cool looking stuff, but it's the exact thing.
Yeah, I mean, certain coins are, you can buy like British legal tender as well, which is great. Like Britannia coins, Maple Leafs, you can buy like Tudor Beast. Like
nobody buy Maple Leafs. We've got some Canadian people here, but come on. Jeez. I wouldn't do that to you guys. So do you recommend, is there...
Yeah.
I mean, do you have a way that you would recommend the average person out there, what they should get? Because I literally made the decision based on the price.
Yeah.
I was like, well, I don't think I need to have the US tender version of it or the US coin or the US mint coin. I just give me the little bars. That's fine.
Yeah. Bars are great too. Because if someone said, okay, what's the most cost effective way to buy gold? Then I would say you just buy the biggest bar that you can.
Right.
If you've got $42,000, buy a 10-ounce bar, and then you're done, right? But the only problem is that, say you spend $42,000 on a bar of gold and it's gone up to $50,000, and you want to get 10,000 of that and give it to your kid, buy a car or something, then you got to sell the whole bar. So,
I've seen videos where people just shave it off.
Yeah, you could try that, but it's. These are cool. This is you can get combi bars. This is
what are they called?
It's a Valcambi combi bar.
Combi bar,
silver one. But you can break this off. This is in gram increments. It's the same for gold. Gram of gold today is $130. So
that's cool.
So
you could you break it off and
split it up. Yeah, you can split it up. So it's a cool way to do it. But yeah, I'd say that most people do prefer coins just for the barterability aspect of it. Even now 1 ounce coins are probably quite expensive. So you might want like 1/4 ounce coins, 10th ounce coins, just because you don't want to be dealing in $5,000 increments, maybe, in 5 years, $10,000. It's a lot, right? Yeah. So you'd rather have something more divisible. And obviously silver as well. Silver coins are great. 1 ounce, 2 ounce coins, 1/2 ounce coins, stuff where you can, it's barterable as well. If you do need it, it's there. You don't want to be walking around with a wad of $100 bills, do you? You want some change. 20s and 10s.
Well, I thought, hundreds was change. So, not that. I think we've established that I'm not at that point in life. Well, look, I've got a couple of other things to talk about, but really, I think what I want to just kind of finish with is silver and why the price of silver moves a little bit differently than the price of gold will. And I think you had mentioned that to me again before the show. We were talking for just a few minutes and talking about how these institutions are buying gold to hold, and they don't really buy silver the same way. But silver does have some other kind of really interesting properties to it that make it something that people are going to purchase for different reasons.
Yeah, we're seeing tremendous investor demand for silver this year. We've probably sold more silver than we have gold this year, and we are seeing a rise. I mean, the stats out that you had, 70%, just shy of 70% year to date on silver. Yeah. It's insane. But a lot of people look at just the industrial applications of silver. So, electric vehicles, solar panels, all these tremendous data centers that they're building. It's going to require a lot more silver. And there's already a supply deficit of silver. It's not that easy to mine silver. Silver miners only sort of, commit to 20% of the silver that is produced. The rest of it comes as a byproduct out of copper and zinc miners, and then they'll produce silver as a byproduct of it. So it's hard to just dump silver in the market because the price is going up. Yeah. So, there's a supply shortage as it stands. Demand is going to continue to go up, so the price should go up. And then a lot of people are also married to the idea of the gold to silver ratio, which is how many ounces of silver it takes to buy 1 ounce of gold.
Gotcha.
Right now we're at sort of 4,200. It's like 75 to 1. Historical averages for the last 100 years have been closer to 40 to 1. So that would suggest that if gold didn't go up another cent and it stayed at 4,200, silver should double in value, really. And that would be $110 silver. Now, gold, if silver's going up, gold would continue to go up too. It's just playing catch up right now. So I think, if you was to say, okay, what would double in the next couple of years? Silver. Silver next year could very possibly be $100.
Wow.
I wouldn't be surprised at all. I didn't think.
I had no idea, so I might buy more silver, and it's cheaper, so you can buy one of those
cheaper.
coins.
You get. I mean, if someone comes to us now and they buy like $50,000 worth of gold, then we're often like, "Is that it?" And you're like, "Yeah, unfortunately, that's it." 10 of these.
You only get that.
10 of these is not great, but $50,000 worth of silver, it's still, you're still getting a good amount of silver for that, and it's still undervalued. Back in the 80s, silver was like $45. So
really,
yeah.
Huh. Is that adjusted for inflation or just?
No, that was $45.
Straight price.
Yeah. So it's just recently surpassed record highs.
Okay. So this is a little outside. So guys, if you have any questions, if you want to get information about this, education on it, if you want to buy anything, go check these guys out, and we'll throw up the information on the screen right there. So you can go to lwcgold.com or call 1-800-628-4653. You guys have a really cool deal right now. Receive up to $15,000 in free silver with a qualifying account. I'm going to get the terms and conditions from you on that later. Free money is always good money. But if you are interested in buying and having physical, go and use these guys. Like we trust them. We wouldn't bring them in and talk about all this stuff if we didn't. But we talked about something that was a bit unrelated, but I think we talked about it because of silver. Yeah. And that was the power plant kind of conversation right now. And I think a lot of people know with AI, with all these companies, like the power demand is just astronomical. And we're not really sure how we're going to be able to deal with all of the power requirements for this, but it's caused some pretty interesting things to happen. So tell them what you were telling me.
Yeah, my theory,
before.
I'm not a financial advisor, I don't give stock advice. But nuclear energy seems to be like the biggest path forward, and that's what you're seeing a lot of government funds going into now. Yeah. The UK and the US recently just signed a deal to both employ developments in nuclear energy, and it was that technology that everyone's scared of, right? Everyone was scared of Chernobyl. It just has a very dirty rep on it. But people now think, okay, well, nuclear energy is, we consume more energy than we're ever going to consume. And these data centers and the AI industrial revolution is going to consume way more energy than we can probably produce right now. So we have to think, okay, what's the most efficient way that we know to produce energy? It's not wind turbines. It's not solar panels. Yeah. It's nuclear energy. That's it. So we have to develop in that. So it's been an area that I've been very interested in watching.
Speculating a little bit.
Yeah. And it's, it just makes sense. It just makes sense. We now have, much better technology than we had beforehand. So, we can do it in the right ways now.
Yeah. No, it's really interesting because I'm curious to see how all this shakes out, because nobody's predicting all of these things will keep going up. Something's got to give somewhere, right? And they're not quite sure what that looks like, how it'll end up kind of playing out, and where we will be in 5 or 10 years. There's going to be some people that are stronger and that survive. But one thing, and I've had, because of my wine business, I've had exposure to some of the top financial minds in the retail investment advisor kind of market. And sometimes you realize they don't know anything more than the casual investor.
Yeah.
And so it's like this kind of fake kind of expertise. But one thing that they have talked about that I think is true is, and just it gets borne out in the results, it's not as important to time the market as it is to have time in the market. And they're talking specifically about like investing in the market over the long run, and having a 401k and doing things like that, or buying an ETF. I think also when you're looking at that, when you are looking at like buying gold or silver or doing anything else investment wise, start small if that's all you have. Like, do whatever you can, because it is so nice to have. Full disclosure, I've been an entrepreneur just about my entire life. I really didn't have a savings until recently, because I was putting every dollar that I had into building companies and trying to build something that hopefully would have a much higher return. But just having something come out of my check every single month, no matter how small it is, because if you look at it, at the end of the day, like if I buy gold or if I buy silver for my kids and just throw it in, like a box and just let it grow in some value over time, you're going to get some increases for it. Same thing with the stock market. If I just start putting $100 a year or $100 a month or $1,000, whatever you can do, you're going to see kind of that growth. And you're also going to feel a little bit more kind of financially secure.
Yeah.
So that when things do happen that maybe are a shock to the system, you've got some savings. So the first thing I recommend is, as quickly as you can, get out of debt. That's one of the biggest killers of financial freedom in this country. Pay off your credit cards as quickly as you can and get to a place where you pay them off every single month and don't pay interest. Get savings. I think there are a lot of people that'll talk about this. And again, this is not like, financial advice that you have to live by. This is just what I'm doing. Got out of debt, then try to get 6 to 12 months worth of savings in line, so that if something happened with my job here as CEO of Louder with Crowder, if I fired myself or Stephen fired me, because the sign's still there, then I would have something to live off of while I was trying to find that next step, and then start investing in things that make sense. And for us, that was getting 401k going and getting kind of some physical assets together. So like it's a part of a comprehensive plan. And I don't hear it spoken about a lot from other people that way. They just want you to buy their thing.
Yeah.
And I appreciate that you're at least allowing me to kind of walk people through that whole process.
Yeah. And some people, do put way more money than you would imagine. They put 70, 80% in because they perhaps more believe in end times and they think that the writing's on the wall and they want to prep and they don't believe in the financial system. And that's great. Personally, I don't have that set up, but if that's what you believe, then I'm not going to tell you what to believe in. That's it. But most financial advisors would tell you, somewhere between 10 to 20% is great. If times are looking a bit shakier, then maybe you do a little bit more. But it's got to be what you're comfortable with. But the most important thing, as you said, is getting started, because some people kick the can down the road for like 6 months, a year, 2 years, and they're like, oh goddamn, I should have bought 2,000. Now it's 3,000. Now it's 4,000.
Certainly it can't keep going up, right?
It can't, but it probably will. But
but that's what people will say. And I'll just wait and time the market. That's what I'm saying. Like time in the market.
And that's why consistent investing is like, you're not betting today. Okay, the gold price is 4,200. Silver is 52. Okay, is it going to go up or down? Am I going to invest $100,000 today and make that decision, or can you do 10,000 and then wait a couple months, do 20,000? And break it up, and then you'll get an average across. And some are going to be better than others, but it's probably a more sensible way to do it. Especially when same with the stock market right now. Especially when everything's quite high, you don't want to put all your eggs in one basket or at one price and be like, okay, that's me. You'd rather take it steadily. We find that most people that are investing, whether it's their retirement accounts or like with cash accounts, like they invest once. If someone says, oh, okay, I want to do $1 million or 500,000. Okay, well, start smaller. The initial amount that you do doesn't really matter to us. Let's just make sure that you like doing business with us. Make sure you're happy.
Yeah, that's what I was going to say. Yeah,
and then we can, we can do it again. We can do it, and as soon as you get delivery, we can do it again. We can do it in a couple of months.
You can still buy gold and silver tomorrow.
I always tell people, like, we're always going to be here to sell you gold and silver. That's what we do. That's how we keep the lights on. It's just up to you about what price you're going to pay for it, and we don't have a crystal ball on that one either. It could go up, it could go down, but that's why you just got to take action. Procrastination is probably the biggest killer of all gains. You need to make a decision on something.
Yeah, absolutely. And so and put the information back up for me really quickly. So if people go to the website lwcgold.com or if they give you guys a call, is there information on? Can they learn a whole lot about that? Like what's the best
we
way
have
for people who just don't know?
Yeah, we have different informational guides. You can give like
leave that up there for now.
Yeah, give one of our reps a call and they'll ask you a few questions, what you're interested in, so whether you're looking at like cash accounts or if it is retirement accounts, because there's different limits, like different stuff that you can do. So the guides that we have explain that, in great details. Then we do one-off stuff. There's things changing. We'll do market reports for next year that will come up, so you can educate yourself a little bit more. On the website, we also have weekly blogs as well, so people can just read, get familiar with the market, speak to people. And I always say just dip your toe in the market. If you're nervous about it, which is like I totally get. People like used to think that you was crazy when you bought gold. That was it. If I used to tell people that I sell physical gold and silver, they're like, oh, to the crazy people that think that get a shovel.
That's
in the
how it's been
backyard.
Marketed. It's just like I get it. But that's why we wanted to do it differently. So,
but now it's not. Now it's now you're sensible if you do it. So get started, see what you can do. Feel comfortable with it, and then you can always build on that. And we've had clients now that have been buying from us for 5-6 years that are still buying. When it was tripled in value, it's still going. So.
No, I love it. Well, Samuel, True Gold Republic, lwcgold.com. Thank you very much for being with us.
Thank you for having me.
We look forward to the partnership for many years to come. Maybe we'll have you back on, relatively soon to see how the market is doing, because in a couple of months we could be seeing something completely different that we'll have to talk about. But thanks for being here with us. I appreciate it.
Subject for today,